Alright, good morning everybody. Welcome to Friday class. Good morning people. Welcome to Friday class. Good morning, good morning, good morning, good morning. Welcome to Friday class. How are we doing? How are we doing? Alright, so quickly we are going to be talking about we're going to be talking about swing structures and lower entry Alright, so quickly we are going to be talking about guys, can you hear me? Okay, beautiful. Since we are here, let me know your name and where you join us from. Your name and where you join us from. Your name and where you join us from. Your name and where you are joining us from. Your name and where you join us from. Your name from Abuja, awesome. Master, I greet you. Olainka from Kwara, Ifan from Abuja, David from Delta, I greet you. I greet you. I greet you. I greet you. Is that all? We have 90 people on chat. We have 90 people on chat. Chibuzo from Abuja. Okay, so we can go on. Swing structure and multiple time analysis. Now, when you talk about swing structure helps you understand. Can we start, please? Can we start, please? Fine from Saudi. Can we start, please? Can we start, please? Can we start, please? Queen, hi. Alright, so when you talk about swing structure is um what is currently happening in the market. Alright, it's like an umbrella for you to know what is happening right now in the market and for you to take decisions based on the current parameters that the market has given you. Don't forget, in last class we talked about um, swing trades and what we are going to do in future. All right, and we talked about multiple time frame analysis, and I went on to say that Most time frame analysis is like going deeper or zooming into something to see more details. All right, multiple time frame analysis ultimately gives you a sense of the direction and the current happenings of the market, meaning that in higher time frame analysis, that is in higher time frame analysis, you can see more, but in lower time frame analysis you can see better. Please get that down. In higher time frame analysis you can see more, that means you can see the whole of Africa, but when you come to lower time frame analysis, that's when you can see better the people, the culture, the country. That's what it's about. Alright, so now in swing structures, swing structure just talks about the parameters of the external structure and the internal structure. It talks about how you can benefit from the entire picture, see where the market is going, and how to follow the market where it is going. Do we get this? Do we get this? Should I continue? I need us to understand where what I've said, so that we can go on. If you understand, say I understand. If you don't understand, say I don't understand. So we can go on, please. If you understand, say I understand. If you don't understand, say I don't. So I can know how to do that. So we can go on, please. Can we move on? All right. Now let's go. So from swing structures, we have this on higher time frame. This is an uptrend on higher time frame, right? This is an uptrend on higher time frame. An uptrend on higher time frame, and then we can now start looking at how can we benefit from this move. All right, we know our market moves in ups and downs, uptrend, downtrend, uptrend, downtrend, uptrend, downtrend. How can we now benefit from this move? How do we make sure that this moves? How can we make sure that these moves are profitable to us? Now, of course, you know that if market gives us an upward trend, all right, what we expect is for a reversal. Now, take note, after market takes a level of liquidity, or a level of money is lying down around this point, market will go down, take a breather. Of course, you know that after every break of structure, market will take a breather and then move forward. Now, how can we now benefit from these moves? That's where swing structure and internal structure comes to play, and I'll explain that right now. Now let's move on. So we see something like this in the move. We see a move like this. We see a break of structure at this point, right? Break of structure at this point, right? And ultimately, we see market after taking this high, or after taking this move, it starts doing something like this. So we want to come back to this point. Let me make that smaller. Now this is the break. Now we start doing something like this to come now smaller, right? All right, and then we see a move here, probably an FVG imbalance, anything that will make this market go higher. Now ultimately, people would be expecting to sell from here. Now this is what I don't understand, and this is what I don't like. People will tell you that there's a high here, and then they want to sell, which is very wrong. Now what this means is that when market touches this imbalance or other block or FVG or whatever it fills up, and then starts moving in this direction, what is expected is that market will go up like this, break this high here, break this high here, right? Now once market break this high here, the swing structure has changed. Once market break this high here, the swing structure has changed. Olamsi say I don't understand. Once market break this high here, the swing structure has changed, which means that our next place for the buy that we are taking note of is no longer this place. All right, this is why some people make mistake. They will want to put their position here, and they will tell you that once market gets to this zone, I'll sell, which is very wrong. And then that is why market takes them out over and over again. Now listen to this very well. Listen to this very well. Because of you didn't understand the swing structure, right? You just saw a high, or you saw a swing point, and then you just say that market will start going down from there. It is wrong, because this is the break of structure. The break of structure here comes back to that block to fill it, then moves up. Definitely what will happen is that it will move past this zone here, giving us another swing high. This point now becomes your swing high. This means that this is the end of this trend, and then the reversal now start happening. Once the reversal start happening, you get to know that the reversal will now get down all the way to stop here. That is where caused this move to start. And then right now we now have a new swing structure and a new break of structure, which means that once market gets here, right, this now becomes the strong low. This becomes the strong low, and then this becomes the weak high. The weak high means that market is likely to break that high to form a new swing structure. I don't know if I'm making sense, or I should start again. I don't know if I should start again, or I make let me start again. All I'm trying to say this morning is that people make mistake having to draw the wrong zones and expect that market will go down from there, or expect that market will go up from there, because they don't understand the swing structure. The swing structure is gotten from the intrinsic move of the market, which is impulsive, which is corrective, impulsive, corrective, impulsive, corrective, impulsive. Now, having this in mind, let me show you what happens. Now, from here, what happens is that after market gives you a break of structure at any point, after a break of structure at any point at all, right? After a break of structure at any point at all, what we do is that we drag your break of structure here, mark it out, which means that market has broken structure. Market break structure can literally translate to that market has taken out all the early sellers. Means that market has taken out all the liquidity lying down at that zone. All right, so what market thinks is that what usually happens in market is that market will now come back here, they enter a kind of MVG here, or a balance here, or a reason to move from here, comes like this, rest on this zone, rest on this zone. Once market rests on this zone, now this now becomes what? Your weak high, and this becomes your strong low. This is your weak high. Your weak high means that because that is where a trend ended, means that there will be money lying down there which market will want to take. It is a weak high, which means that it must be broken. Which means that it must be broken. It must be broken because from the intrinsic move of the market, all right, from characteristic move of the market will go to like this, impulsive, corrective. Now look at this, impulsive, which means that it must break this high. So why then do people want to start selling from here? Why do people intend to say they will sell from here? Ultimately, 7 or 8 out of 10 times this fails, because market will have to break this high again to give a new swing structure. Get it? To give a new swing structure. To give a new swing structure, right? To give a new swing structure, so that this place that was weak high is now broken, and then there will be a new low formed at this point here for market to retrace back to. What I am doing simultaneously is telling you where market will trace to and why a high or your low does not hold when you try to sell or buy from there. I'm trying to tell you why a market does not hold, or when a swing high does not hold, because you are trying to buy or sell from that place is a strong high, or sorry, that place is a weak high, and you are leaving as the weak low. Please, if you don't understand, say I don't understand. If you understand, say I understand. If you don't understand, say I don't understand. If you understand, say I understand. If you don't understand, say I don't understand. If you understand, say I understand. Okay, so I'll try to explain from here. I'll try to explain from a real chart. I'll attempt to explain from a real chart. I'll attempt to explain from a real chart. Alright, now look at this. Look at this. From this move here, right? This is a move here. Here we have our what? Our break of structure here. Our break of structure here, right? Now, can I use this? Okay. Why do you think this high broke or failed? Because some people will be looking to what? To sell from here. This is a 2 hour time frame, by the way. By the way, this is a 2 hour time frame. Now look at this. This is a what? This is a move one, and guess what? Some people will try to sell from here because obviously this is a demand zone. Thank you. Obviously that's a demand zone. Now tell me, why didn't this zone hold? Because obviously you see that there's a chalk here. We see a clear chalk there. I will see a demand zone there. So why did it not hold? Why did this place not hold? Because whether you like it or not, so many people would want to start selling from here. So many people want to start selling from here. So many want to start selling from here. But what happens? What happens now is that market will now get to that zone, fails woefully, because that is not the best place to sell from, because this is a weak what? This is a weak high. A weak high means that, in case you didn't understand my definition of weak high, a weak high means that if market is going in an upward trend here, right? Market is making impulsive move and this thing, you cannot want to sell from here because the market is in an upward trend. So selling from there is useless because market would want to definitely break it. Now the trick is that it might give you, it might want to give you hope that it will sell from here and start renting from here, but ultimately it will go up because this is a weak high. What then happens is that because this weak high has broken, the new structure or the new structural swing will now be here and here, which means that from this here and here, now this explains what we want to talk about today: internal and external liquidity. This means that the new swing range is here and here, showing us that everything that happens in between this point is now the new internal liquidity, sorry, internal structure. I don't know if I'm delivering well. I don't know if I'm explaining well or you're confused.